Let's talk about bonds today. The alternative name for bonds is debenture or fixed. So, look example. Doji Finance issued 250,000 debentures. When we say that someone issued debentures or bonds, it means that someone has borrowed money from the investors, and investors are those who bought these debentures and bonds. So 250,000 bonds with a face value of 50. So for convenience, when you do this kind of exercise, multiply the number of bonds by this value of the bond and get the total amount of money that you borrowed, Doji Finance borrowed. So in our case, it would be 12.5 million. The coupon rate is 9%, and the life of the bond 5 years. So it simply means that look at this slide. So the company Doji Finance borrowed 12.5 millions, and it has to return after 5 years 12.5 millions. So they borrowed money, 12.5 millions, and then they have to return this 12.5 millions. And in addition to that, they need to pay interest. Interest, the coupon interest, equal to 1.125 million. How do we get this figure? You simply multiply 12.5 million by 9%, and you will get the annual interest, annual coupon payment. And importantly, this coupon payment will stay the same every single year. And so in last year, in year 5, Doji Finance has to repay the principal and the interest, the last coupon payment. And all that, this principal and all that interest payments are fixed. So no matter what happens in the financial markets with other type of investments, this is the amount that needs to be paid. The next question is, what is the price that investors are willing to pay for that bond on 1st of April 2010? In other words, all that, the coupon payments and the principal payment, is all future value. But we want to find the present value. So for payments need to be converted to present value using the appropriate discount factor. And the discount factor is also given to you, 11%. So therefore, when you find the present value of all these payments, please do not use 9%. Please use 11%. So this one for principal, it would be easy. 12.5 million divided by 1 plus 0.11 in power 5. And you get the present value of the principal. Regarding these coupon payments, you can convert them one by 1.125 million divided by 1.11 in power 1. This one divided by 1.11 in power 2. This one divided by 1.11 in power 3, in power 4, and in power 5. You can do like that, of course, but what if you have many coupon payments? That's why you need to use present value interest factor of annuity. So this information you just ignore. It's not applicable to you because we're going to use discount rate, not the coupon rate. So this value you will use for 12.5 millions. And this value you will multiply by 1.125 million, and you find the present value of all these coupon payments, 5 of them.